everyone. It's not often I do one of these dedicated uploads here on social media, but I thought today would be an apropos day to do it in light of the roiled financial markets and all the chaos that seems to be breaking out worldwide. I can tell you one thing, if you're not subscribed to this channel, because we talk about these things on the weekday, on the daily at 5 p.m. in the afternoon on the Rosie O'Kelly live streams for the first hour or so, and then we reserve the rest for our fun, as well as weekends. Make sure you hit that subscribe button and the bell for all notifications, because, well, I would give myself an A going forward to the things that I've talked about that are coming down the pike over the last year. And the things that I see ahead should be of concern to everybody that's in, well, certainly in the United States of America and in much of the free world. Many of us woke today to the news, and earlier this week we had the Japanese yen declining like crazy in value against the US dollar, and we had the British pound overnight and into today, well, closing in on 1-to-1 with the US dollar. Whereas a couple weeks ago it was 118, 120, bouncing around in there, and we're losing steam very rapidly. This has great implications worldwide, and it's something that you should be aware of and key down on, because one of my contentions, my main one, is that economics underlies everything. It underlies the social order, the social fabric of nations. When times get difficult and citizens are challenged for their daily bread, well, we see example after example of revolutions in Russia, revolutions in France, revolutions worldwide, when things get tough and people have a very difficult time eking out a living. Oftentimes the ruling class is oblivious to the struggles that are going on. So when times do get stressful, people put it in gear and they're motivated to take action. They become political, they become activists, they hit the streets in large numbers. We have a situation worldwide now where we have global chaos and instability that are becoming more and more obvious to people. We passed through a period of the pandemic where everyone was taken care of for the most part with the stimulus checks that were sent to many payroll protection programs, which have been defrauded, as far as they know, just at this point in time, to the tune of $100 billion or so of fraudulent payments. But people were able to skate through and have the money, and they had, in many cases, the most money they've ever had in hand with the payroll protection enhancement programs of $600 extra a week. And they spent that money mightily. But now we've reached a point where worldwide, where we're coming out of the pandemic, so we believe, and the need for stimulus is being pulled back because, well, as Chairman Powell would be the first to say, we overstimulated the economy. We printed too much money. And inflation exploded to 10%. And as a result, people were led to believe that interest rates have to rise to contain inflation. But if this was the true story, my friends, you would have exploded long-term rates, 20, 30-year loans to the government. The interest rate on them would be sky high right now. Because if a government is going to be this wasteful and run such huge budget deficits and overall levels of debt in totality, why would you think it would improve in 20 or 30 years? You would be more apt to penalize that borrowing government by demanding a much higher rate of interest than 3.5% that you can get today, 3.5% and 4%. Strange world. You get more return on a 2-year loan to the United States government than you do on a 30-year loan. It's called an inversion in the yield curve, and it's rare. And it's been sustained for a long time here. And it's something that has dramatic implications for economies worldwide. But what I'm suggesting to you today is the rise in interest rates that's occurring has less to do with the force of inflation, because we have oil below $80 a barrel today. We have the chairman of Phelps Dodge complaining that they're not going to be able to bring any copper to market, new exploration, because the price is too low. We have lumber prices going down, demand for building materials going down, demand for real estate going down. We see the forces of deflation starting to unwind and spread their ugly tentacles worldwide. Quite the opposite of what you may believe the Fed is fighting. To my knowledge, I'm the only person to this point in time has suggested that the rise in interest rates has to do with rising risk within financial systems worldwide. In other words, the thought of lending money to governments because of the way that they do business and the way that they tax, spend, borrow, and print has become alarming to a group of people, unnamed, who knows, large numbers of people who are concerned that the path that we're on may not be a path that leads to wealth and prosperity in the future. It may be a path that leads to social dissolution, chaos, and then potentially war. The big problem is, and I've never been one to beat my chest about a gold standard and things like that, but you do need a worldwide standard of value that currencies get measured upon. And back in 1933, when FDR effectively took us off the gold standard and called in Americans gold with notices in post office to turn in all your gold, people complied, and for all intents and purposes, we were off the gold standard, and Roosevelt was free to tinker with inflation and set the new price of gold at whatever value that he wanted. It's one of the fearful factors that led to the meltdowns of banks before Roosevelt took office, because people were fearful that he would inflate the currency, and it's something he did in desperation to get this nation out of depression, and something Herbert Hoover never dared to do, because he knew you had to have a standard of value to measure upon. Think of a standard as like a solar system, where our solar system, where we have the sun in the middle of it, and we effectively remove the sun one day, like quietly without people knowing. The sun disappears. We have planets that no longer have something to circle around if we think of that sun as like a gold standard or something like that. And after World War II, we developed a system called the Bretton Woods system where, well, we paid things to the US dollar. It's the backbone. It's the nation fought two fronts, World War II, and success was won, and a new currency order was built. But what that created was a good system in the short run, because you had a lot of stability, because people were prospering post-World War II, rebuilding, rise of manufacturing, rise of the U.S. as a power. So it worked well. But now, without the sun, we have a situation where the planets, instead of having something to revolve around, all the different nation currencies, they're all pulling in towards the largest planet in the monetary field, which is the United States dollar, to the detriment of their own economies, because it's perceived to be the only currency that seems to have the stability and have the track record of full faith, credit, and confidence that attracts money from overseas. What this means is even important nations like Britain and Germany and those on the Eurozone have less ability to control what happens in their individual nations in the way of currency, because, well, they can't run printing presses and don't have the worldwide panache of the US dollar and trade and exports. They don't have that. So they live and die by the international community's view of what their currencies is. So last week when Japan comes out and they've seen that the yen is declining radically because, well, they don't want to raise 10-year interest rate. They don't want to raise borrowing costs to the government because they're borrowed at the wazoo, something like 200% of GDP. They have borrowed since 1989 to try to light a fire under that economy. And that economy is nowhere near the peak it was, market-wise and other things that it was in 1989. But it's not for lack of trying, because governments will give it the old college try to create prosperity by injecting cheap money, by borrowing money, putting it into public works programs and things like that. But are those programs natural in the sense that they would exist absent government interference in the economy, absent the standard of a gold standard or something like that? Would that borrowing occur if the penalties were great and the currencies would be whacked for borrowing and interest rates would soar? Well, you can control your own universe, your own gravitational field for a while. But now all the planets of the international nations are pulling together and hurtling towards some financial meltdown here because of an inability to allow economies to grow and prosper by natural order of price signals, wage signals, commodity signals. It's more and more government intervention that's driving the prosperity, quote unquote, of the nation and the ability of people to feed themselves worldwide by borrowing, injecting, or printing money. And we do have the inflation. But let me get back to the story of Japan. Japan decides we can't have interest rates go up. We can't afford it. It's going to bust the back of the Japanese treasury if we have to pay higher interest rate on all this debt that we have issued to prosper over the last 20, 30 years or so. So what they've had to do, because the United States raises interest rates, and it is the largest planet in the solar system, Japan gets sucked more in towards a collision. And what do they have to do? They have to start, 2 days ago, they started intervening at the markets to try to put a floor under the Japanese yen. My friends, those things never work over the long haul because capital markets and currencies are going to go where they're going to go. They're going to seek their natural level. And the only reason they're not going to is if countries impose capital controls. It means you can't take your Japanese yen and exchange it into US dollars anymore. Well, doesn't sound like a free market world to me, does it? Now we woke up today to the news that over in the UK, another country that's now on the bandwagon of we have to borrow our way to prosperity, has decided that they're going to have the largest tax cut since 1972 in hopes of stimulating the economy. Is it a natural occurrence of economic demand that the economy be stimulated? No. It's a belief that when we borrow or print money at the exchequer, the treasury of England, that this money will stimulate the economy widely and broadly for people. But what would people buy? England has a 10% of their economy is manufacturing now. I would suggest, because it's not a natural order of trying to buy prosperity, then many people will do what they did in this country when they were handed the gift of money during the pandemic, and that's go out and put orders in for new trucks, for cars, for all kinds of TVs, computers, everything, trips, travel, Vegas, you name it. How much of that really found its way into productive activities? How much went to Grubhub and Uber Eats and things, and people rewarded themselves because they felt prosperous. It's a natural thing. But we now reach a point where to keep this prosperity going, and we've seen England's GDP has been declining and it's looking at recession coming up. And now with oil prices below $80, it's going to be very hard for North Sea oil to contribute any towards budget revenue. We reach a point where just the creation of money sustains things enough to just get along for a couple of years. And the Chancellor of the Exchequer seems like a nice bloke, but he said, don't worry about it. Yeah, we're going to have budget deficits, but it'll probably net out its supply side economics. We cut taxes on the rich, right? It'll trickle down and the Treasury will be full. Well, I'm not quite convinced that cutting taxes on the rich is the key. Okay, but what I do know is going to be costly. And as a result, besides sterling, the British pound going down to 106 today in almost a free fall, interest rates spiked up like crazy because people know every time now when they hear borrow, 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 or we're going to put out a new issue of government bonds, whether you're in the United States, whether you're in Canada, whether you're in France, the Eurozone, we need more money, or else we need to print more money. And therefore, interest rates are the great governor that's like, no, we don't think so. We don't think so. And the cost to borrow and the budget impacts become severe. Now, all of this intervention over many years and the sun disappearing because of a lack of standards in the economic world has created planets that are pulling together in their own gravitational pull and heading for a, well, nothing short of a wreck. Okay, because absent a standard, and you want to talk about a new monetary order, well, who knows? But what I'm saying is we can understand how we got here, and we can say to the people that say interest rates are going up because of inflation, and we can say, you know what, you're full of shit. I'm going to say it here and now that interest rates are going up because of financial instability and this persistent need to buy and borrow prosperity. No natural signals of growth. Nobody goes through any pain anymore on the downside, right? Great swaths of society don't get unemployed, at least up until this point. Because every step along the way, beginning in 1933, the government, as our partner in financial success, has increased its handhold on us every single year. To whereupon we've now reached the point where the ability for one to take care of oneself, absent any government at all, is an increasingly rare thing. So it's time for the great weeding out. It's time for the grim reaper of economics to take its toll, and it's beginning to do so. And before there's ever any talk of some type of new world order, new currency, or something like that, there's a valley that we have to go through, okay? And it's not a valley that the government at this point in time, the rope's not going to go low enough to get us out. Okay, like it or not, a new world order is going to be forged in fire and steel here and sweat and tears. It's the only way. Because if you make it your mission to placate people and give and give and give, you give them less incentive to work and work and work and produce and be productive. Till finally you've created tens of millions of people that are dependent every month on the government for their very existence. That's a lot to pin your hope on in a world that's measured by the rise and falls of great civilizations over the course of thousands and thousands of years. We know that nothing lasts. So this is what I suggest to you, that, and the first person that I know is suggesting to you, that interest rates are rising because the risk in the system is rising, and people with a lot of money are demanding more to loan that money. People say, oh, well, the Fed's raising interest. The Fed's following the market. It's following the 3-month, 6-month bill. It's racing behind that, trying to raise. Inflationary flames are gone. Poof. Powell knows it. So what's at risk here is social order and potential social disorder. Okay, because we may be reaching the point in the not too distant future where the government is, for the first time since 1932, basically telling you, yo, you're on your own. And we already see at the margin now when things are great and people are doing okay in the restaurants and people are eating out and having a good time. Right? We're seeing even at the fringes that society is coming unraveled with theft and the brazen activity of vandals and thieves and things like that. It's a concern. There are implications on that for everything from retirement to personal savings. Let me say this too. If your financial advisor or your broker doesn't have these kind of discussions with you and doesn't give you of their own opinions and can deviate from a company line from Merrill Lynch or Payne Weber or whatever, you should probably fire that advisor. Okay? Been ringing the bell for over 8 months, 9 months, that we have the most overvalued equity markets in the history of the world. And how much more overvalued do you think that they're going to be? They're historically never reached unprecedented levels. I also suggest that you hit the subscribe button and the bell for all notifications, because it's going to be interesting coming up for sure. And we're going to be discussing some of the outflows of that. In terms of markets, I said the other day that the Dow Jones Industrial Average breaks the low of mid-June at 29,888 or whatever, and does not reverse and close on the high of the day, that we would be having another leg down. It's decline. Doesn't mean we're not going to have rallies. I've called rallies along the way in August, in other words. But the trend is going to be working lower. And as the news cycle gets negative and nations start to take more and more control and become more panicked about the solar system around them and the values of their own currencies and trying to sustain them and being forced to raise interest rates in an attempt to protect their currency, or else be like Japan and they're buying the yen and selling dollars to try to keep the pressure, if they're losing propositions in the long run. Make sure you subscribe, hit that bell for all notifications. And yes, we are going to have another leg down. And by all accounts, it can be the most protracted and most painful of all. Hey, I don't cheer the future on, but I don't bury my head in the sand either. And I am proud that if you've been a part of this channel for the last year, you've seen these events coming. You've seen discussions of overpriced and where we stand. I'm not a financial advisor, but I do have a sense of history and a sense of where the values might be, the over and the under values. Make sure you subscribe. And tell your friends too. If you think this is interest to your family or others, please share the link, tweet it out. And I know it's been a long one today, but thank you so much for watching. And I welcome your comments down below. And thanks so much for listening.